Highlight for the last day of the week, last day of the month, July 31st. Date doesn't matter. Concepts do. Here's the concept. And we talked about this as it was happening, not 30 hours afterwards. When you have a gap open higher, let me bring this chart over. It's just a simple TPO chart. We opened up here around 58 even. It was above yesterday's high. It was above Wednesday's high. So it's above two previous sessions highs, right? And it's looking to attack these three highs. So it's like, wow, everybody's bullish. And now that doesn't mean you shouldn't be. It's just generally what's obvious to a fifth grader is obvious to most of the rest of the world. And that's fine. It might rally. It might be bullish. It might attack all these highs. But what happens after the open is important. And today, what happened was it not only opened up at 58 in the S&P minis, but they cracked them pretty quick and they held on to the weakness. Let's go back and look at this. Is 8:30. So they open up around 58 even. They slap it, and then they jump into the previous day's range pretty quickly and don't stop. There's a lot of people that look at like 52, 53 even, which is way up here, and they look to buy the previous session's high and then look for a rally. They were wearing it. They didn't stand a chance. Here's why this is significant. And I say it over and over, and I don't think I could say it enough. When you get most of the rest of the world to be bullish or be bearish, in this case, bullish, right? What happens is if those people were good at changing their mind, then we probably wouldn't even have an extended downside in this example. The thing is when most of the rest of the world is easy to be bullish, it's not when they're right, it's when they're wrong that almost becomes a self-fulfilling prophecy and extends the weakness because they can't change their mind really good. They can't get out of losers. They can't, again, it's admit that they're wrong. That's the number one toughest thing in any phase, in any walk of life, being able to admit that you're wrong. And in trading, it's catastrophic because it's holding on to trades that become bigger losers, making them more important, putting giant holes in your account because of one trade or one day, adding to a loser. It all starts with one stupid idea that might have got you long right here because it was yesterday's high. You didn't take the small stop, and you still got the damn thing, and it's down over here. It's like, that's not trading. That's, calling the girl back and texting her and being creepy. She calls the police. She has to get a restraining order on you. Don't call her back. She doesn't like you. You got to know that in here, she doesn't like you. Not down in here. That's when the cops get involved. So you have to be better at knowing not only when you're wrong, but have an idea of the rest of the world because of a gap open higher, and it had no trouble getting through yesterday's high, yesterday's value area high, things like that other traders will trade and jump on. They're wrong, and they're also bad at getting out. And it also made me underscore the point that when you take a bad trade and you manage your risk, again, I'm distilling it down to the people with some skill, and most of the time people that are in a good community. So you take a trade that you think is bad because it was a loser. That's not the case. You manage the risk of that trade, and you were supposed to take it. Don't look for reasons not to take losing trades. Losing trades aren't necessarily bad. So don't look for reasons to avoid all losing trades, and that's what most people do. So they'll look at this and say, I wish I wouldn't have bought it there. What can I do never to buy it there again? And then on Monday, the same setup will happen, and it'll come and rally, and they didn't buy it there. So they caught the losing portion of that setup and missed the winner. Context changes. The key is to be consistent and manage your risk. That's what the key is trade losing trades better. Don't try to avoid them. Trade losing trades better, meaning manage your risk, making the loser smaller and not a catastrophe. Don't try to just say, this trade, how can I avoid taking it? That's what we try. That's what our mind pushes us towards, the path of least resistance. Don't take any losing trades. Then you never have to admit that you're wrong. Life would be better. You're never going to go with a perfect record through the course of a week. It's not going to happen. You, at a later date, if you are accountable and if you do some decent review and you're consistent, that's when you can eliminate bad trades or losing trades. You could say, you know what? This is a SHIT trade. Why am I taking it? Then remove it after you review and say, I consistently traded this setup, this idea, and it's a crappy idea. So I'm done taking it. That's when you avoid or not avoid, but that's when you eliminate losing trades. But don't have your mind take you to what can I do so I don't buy it there next time. Sometimes nothing. But at some point, and what we did early on is, what did I tell everybody? Probably by 8:40, 10 minutes after the open. If you're going to get long, you better get a quick winner on it or get the hell out. You got to be very careful getting long because of the gap open, and we jump right back into the previous session's range. It's fine if you're going to try to get long, but you better cut your risk and you better get immediate satisfaction or your location sucks. And you could be in the face of this kind of downside. I mean, generally, this support level works really good, and it barely jumped out. These support levels work great, and it didn't even jump out, sliced right through it. Then it came back as overhead resistance. So again, there was no, and this is in hindsight because once it got through 52, probably like in here, we were talking about it, and it got through yesterday's high without any effort, then it's like, hey, these are short. This is a big move lower, and this is a shallow pullback. So all the jerk-offs that are long in here, and I call them jerk-offs because it's okay to be long in there. It's not okay to stay long forever, all the way down, right? So the guys that are long in here, people that are long in here, they didn't even get a chance to get out, even if they were trying, because the retracement was shallow. And in here, you know the retracement's shallow. You just have to read that. And then when, let's clean this up. Now when we're over here, what do we know? We know the best retracement was still shallow from there to there. So you have this big move, and you still don't have much of a retracement. And right now you could say that. And that was still, be careful getting long. If you get long, just manage your risk. It's okay if you have reasons to get long, but you're cutting your losers and making them small. It doesn't make you happy, but at least you're lasting through the fight a little bit. At least you're forcing the judges to make a decision at the end of 10 rounds instead of getting your ass kicked and you're on the, and the referee calls it. And there's a difference. So you get into the fight, you buy it once, you get stopped out down there. That's like getting punched right out of the corner. People are mad that they bought a ticket to the fight. So you want to give yourself a chance to fight by, even if you're going to be on the wrong side of the market, you're in there, you're trying to pick good spots, you're getting beat up a little bit, and hey, maybe it ends up being a bad day. You're going to have those too. Have a safe weekend, everyone. It is Friday. If you're watching this video in the future, might be a Tuesday, might be a Monday, might be a Friday. But be safe, and we'll see everybody on Monday.